ESG. You've definitely seen those three letters pop up everywhere, right? In the news, on company websites, maybe even on your coffee cup. But what do they actually mean? Well, beyond the buzzword, there's a huge shift happening in how business gets done, and we're about to break down what it is and, more importantly, why you should care.
So, let's get right to the heart of it. The big question on everyone's mind. Is all this ESG talk about real, meaningful change, or is it just some slick new marketing spin? By the time we're done here, you'll know exactly how to tell the difference.
First up, why is ESG such a big deal right now? I mean, this didn't just appear out of thin air. It's actually a direct answer to a kind of perfect storm of global pressures that are totally rewriting the rules of the business world.
Just think about everything that's happening all at once. We're seeing the effects of climate change with our own eyes. There's this huge cultural spotlight on social inequality. And let's be honest, trust in big companies has been shaken by some pretty major scandals. So now you have everyone, from employees to customers, saying, enough with the empty words. We want to see real action.
Okay, so with all that pressure building, we obviously needed a new way to measure what a good company looks like. Which brings us to our next section. What is ESG really? Let's cut through the jargon and break it down.
At its core, ESG is just a framework, a way of looking at a company. Think of it less like a final grade on a report card and more like an MRI for a business. It's designed to show you all the critical stuff that doesn't necessarily show up on a financial statement, but is absolutely vital for a company's health in the long run.
Let's start with the E, environmental. This is the one you probably hear about most. It's all about how a company deals with the planet. You know, what's its carbon footprint? How is it managing resources like water? What's it doing about waste and pollution? Basically, what's its relationship with the natural world?
Next up, S for social. And this one is simple. It's all about people. How does a company treat its employees? Is it investing in them? Is it fostering a diverse and inclusive workplace? The S also looks outside the company walls, down its supply chain to make sure human rights are protected, and into the local communities it's a part of. And finally, we have G for governance. Honestly, you can think of this as the foundation that holds the whole thing up. It's about how a company is actually led. Is the board effective and independent? Is executive pay fair? Is the company transparent and ethical? You see, strong governance is what makes any promise about E or S believable. Without it, the rest is just talk.
Okay, here's a quick but really important point. People often use sustainability and ESG to mean the same thing, but they're not. Think of sustainability as the big, beautiful goal, the philosophy. ESG is the specific, data-driven toolkit that investors and companies use to measure how they're actually doing on the way to that goal. ESG makes the big idea of sustainability something you can actually track.
All right, so we know what ESG is, but let's tackle the billion-dollar question. Does focusing on all this stuff mean a company has to make less money? Well, it turns out that's completely the wrong way to look at it. Let's talk about the actual, real-world payoff. The business case is pretty compelling because it's like a domino effect. When a company gets ESG right, it's not just managing risk, which often leads to better, more stable financial performance. It also forces that company to get creative, to innovate. And maybe most importantly today, having a clear purpose makes you a magnet for the best talent.
And if you want to see a perfect, real-world example of this, just look at a company called Ørsted. They completely reinvented themselves, going from an oil and gas company to a world leader in renewable energy. And the results? They were just stunning. They slashed their emissions by 86% while delivering better returns to their investors. That's proof that this kind of transformation can be an incredible engine for growth.
Now, this whole shift isn't just happening out of the goodness of a few CEOs' hearts. No way. There are massive, powerful forces pushing ESG from a side topic to the absolute center of corporate strategy.
First and foremost, you just have to follow the money. Look at this number, 36%. That's how much of all the professionally managed money in the entire world, we're talking trillions upon trillions of dollars, now has ESG criteria baked into it. This isn't some tiny niche. It's a seismic shift in capital.
And if you look inside that massive pool of money, who's making the calls? Almost 80% of the big institutional investors, the ones managing pensions and huge funds, are now actively using ESG to analyze companies. When that much of the market starts demanding something, companies have no choice but to listen.
And in case you needed any more convincing, just listen to the most powerful man in finance. This is Larry Fink, the CEO of BlackRock, the biggest investment manager on earth. He's basically telling every company out there that their plan for a net zero world isn't some nice to have. He sees it as fundamental to their value as an investment. The message could not be any louder or clearer.
So with all this momentum, the whole conversation is changing. It's not enough anymore for a company to just publish a glossy report once a year. The real test is how deeply this thinking is actually woven into the business itself. It's a move from just reporting to real performance.
You can really think of it as a journey with a few stages. Stage 1 is just compliance, doing the bare minimum because you have to. Stage 2 is risk management, where you're playing a defense. But the real magic starts at Stage 3, when a company flips the script and sees ESG as an opportunity. The ultimate goal, though, is Stage 4, becoming truly purpose-driven, where this stuff is just part of the company's DNA.
And that brings us right back to where we started. In the world we live in today, the pressure from every direction is just too intense for a company to do nothing. So the real question isn't if a company will act on ESG anymore. The question we all need to ask is how. How authentically are they doing it? Is it just for show, or is it a genuine, deep-seated transformation that creates real value for all of us? Now, you have the framework to tell the difference.